If you guys can remember, about 4 days ago, I posted this video where I was showing you guys the most profitable scalping strategy of 2024, or the most profitable Forex scalping strategy of 2024. That video blew up, that video went viral, and on that particular video, I did promise you guys that if I get a lot of interactions and you guys interested in seeing the live examples, then I was going to actually do it. And I'm going to stick to my word, right? So on this video, I've just opened a small live account. So I'm going to put my recording on. I've opened a small live account. I deposited $1,000 on that particular live account. And I want us to be able to trade live. Remember, the account balance on the account doesn't matter, because if I can make 10% on this $1,000 account, it's going to be $100. But if you are doing the same thing I'm going to show you on this particular video, and you make 10% on a $100,000 account, you'll be making $10,000. So it's the methodology which is the most important, which I'm going to be breaking it down. You guys will see how I'll analyze the trade. You guys will see how I'll take the trade. And our target is for us to be able to take a sample size of 20 trades. So guys, you need to follow to the end, because there are a lot of nuggets, there are a lot of lessons that you're going to learn throughout this episode. Maybe you can even have episode 1, 2, 3, 4, and 5, but I want us to have a total of 20 trades. All right, it might happen within a couple of days or even a week, but I'm going to show you guys everything. I want to document everything. By the time we are setting up the trade, putting the indicators, doing everything from the start to the finish. If we end throughout, by the end of the episode, if we end in profit, you guys are going to see it. If we end in a loss, you guys are going to see it. That's trading. I'm going to tell you guys the reality, all right? No one knows the outcome of any trade you want to take. But with a good methodology, with a good strategy, you know that there's a high probability we're going to end the episode, or we're going to end the series in profit. So I'm going to show you guys, to be able to save you time. If you didn't watch that video, just pause this video, go back, click the link below, or just click the link above to watch that video first. When you watch that video, you'll be able to understand the methodology behind the whole strategy, how to set your indicators, the time frame you're going to be using, and everything, so that we don't waste time. Let's just go strictly into the practicals, all right? And if you are ready for us to start, the only thing I want you guys to do is to smash that thumb up on the video, and if you haven't subscribed, click that red subscribe button on the page to subscribe to this particular channel, because we're going to be doing more follow-up videos like this, more live trading videos like this, more live sessions like this, so that you guys can see. So make sure you hit that red subscribe button below to subscribe to the channel. Don't forget, guys, let me give you a minute. Subscribe to the channel, hit that button, subscribe. Let me hear the sound. Boom, let's go. So our first phase is setting up our currency pairs. So most of the time, if you can see on my screen, these currency pairs I have here are the ones every day I come to my computer. Every good day I come to my computer, I have at least 1 or 2 trades on these currency pairs. So I want us to concentrate on these major liquid currency pairs. All right, remember in Forex we have major, minor, and exotic currency pairs. So I want us to concentrate on these major currency pairs. We have gold, Great Britain Pound USD, USD JPY, Euro USD, Great Britain Pound AUY, Great Britain Pound AUD, Great Britain Pound CAD, Great Britain Pound JPY, Great Britain Pound NZD. Then we have some Euro pairs. So what I want you to do is to be able to put each currency pair double, or you should be able to duplicate each currency pair. So you can see here I have gold, which is gold on the 4-hour time frame, gold on the 5-minute time frame. Because remember, according to the strategy, I believe you guys already watched the video about the strategy. According to the strategy, we need 2 time frames here to trade. We need the higher time frame, which is the 4-hour time frame, and we need the lower time frame, which is the 5-minute time frame. Guys, don't get yourself confused. 2 time frames are needed. The 4-hour time frame, which is our high time frame, we're going to be taking for our reference, and the 5-minute time frame, which is our time frame, we're going to be executing our trade in the direction we've already confirmed on the higher time frame. So we have Great Britain Pound USD here. What we have to do is now to duplicate it, all right? So we need to duplicate Great Britain Pound USD. You just come here on your market watch, you right click on the currency pair, go to new chart window, and voila. Here, remember, if you can open this, you can see it just looks as dumb as it looks, but now we need to convert it to look the same as my template. If you can, let me just zoom this in, let me just minimize this. All right, so after you just minimize it and put it side by side, okay? So I'm just going to minimize this, carry and put, I want them to be strictly side by side. So if I can go here, voila. So that is it. That's the next one. So let's push this one in a bit. Let's push it like this. Let's also push this one like this. So you can see we have Great Britain pound on the 4-hour time frame. So we can click here, we put it on the 4-hour time frame. We're just gonna have Great Britain pound again on the 5-minute time frame. So on the 4-hour time frame, if I open this one, you can see the template looks totally different. Totally different. The template is different. But now if I open the 5-minute on, you can see the template is now very, very poor, very, very archaic, and we need to transform it to look as nicely or as nicely presented as the one I just showed you guys. So if we go here, remember we need 2 indicators. We need one indicator, which is the fast moving average, which is the 10 exponential moving average, and we need the slow moving average, which is the 23 moving average. Also the exponential 23 exponential moving average. Remember, I'm just going straight into the action, into the actual trading. And if you want to know how to set them up, the colors and everything, make sure you watch the first video I recommended, because that video will explain everything to you. So if you want to put the indicator on the chart, just come here to indicator, go to trend, and then you see moving average. You drag and drop, then you select exponential moving average, select the period, and then apply to choose apply to median. All right, apply to median. Then for the close price and all of that. So make sure you watch that video to understand all of this. So I'm just going to minimize this so that it doesn't confuse us. Good. So we need 2 indicators on this chart. The first one we need is what again? I'm going to show you how you can save it as a template and just do it next time. So you go to indicator, click on trend, and then you go to moving average. Moving average is right here. You drag and drop, and voila, 10 period is 10. Method is exponential applied to median. I already explained to you guys why we are applying it to median. So you click on OK, and then we need another moving average again, still exponential moving average, but at this time around we put it on 23 period. We have it on 23, and then we change the color to red. All right, so the color for this one is red, and we click on OK. Voila! You see the chart now looks presentable. We can already just see what's happening in the market even without putting any other indicator, right? This is the only thing we need. That's the only thing we need. And then when you already do this on one currency pair, I want you to right click on your screen, go down to where it says template, and go to save template, and you can just write. You can see here I already have mine as what? As exponential moving average, period 10 and 20. That's why I just say EMA 1023. So you save it so that next time, see what's going to happen, right? Next time, if you come to another currency pair, you want to bring in those 2 moving averages again with that same template, everything. You just right click on your screen, go to where it says save template, and you can see exponential moving average 1023. Voila. Boom. Can you see that? Within a split second, we already have our chart as clean as this. Can you guys see this? Good. So now we already have that one. We're just going to make sure we fix all the other ones. Gold also, we just need to make sure gold is fixed. Gold is already having the moving average right there. You can already see what's happening. The 5-minute time frame, let's also see what's happening. The moving average is already there. And then let's go to euro. Remember, we are preparing all our currency pairs. It starts with preparation. So this one, you can see we have a robot on it, but we're going to remove the robot because we're not going to be using the robot. All right, we're going to be doing this manually. So that's why we need to remove the robot. We need to go on the expert list. There's nothing, and then we just have to open a new one or just refresh. Let's just go here, go on template 1023, and voila. So this one, we need to drop it on the 4-hour time frame. It's on the 4-hour time frame. Now let's go to, we need to now duplicate it for the 5-minute time frame. Come on your market watch, go to chart window, and then we need to just duplicate this. Go to template again, drop on EMA 1023, voila. And then this one is on the 5-minute. So we just need to now zoom it in. All right, we just need to zoom it in, and then we fix it. Okay, so at least you guys have already seen what I'm doing. I want to make sure I have both currency pairs on both sides. All right, that's what I'm doing so that you guys don't get confused. You guys have already seen the whole thing, what I'm doing right here. So not to make the video very long, I'm just going to fast forward. I'm just going to fast forward to the moment where I've already put all the secondary currency pairs here. Right, I'm just going to quickly fast forward. Then when I come back, we already have all the currency pairs here. Then we'll just start going into the actual trading. Remember, again, you can see this is my live account. That's live A1. The balance here is what? The balance here is 1,125 rand. I deposited $1,000 on this account, so that's the one I want us to use. You can see that's the account number up there, 732,164 IC Market S2 Live Raw. You can see that's it right there. I wanted you guys to see this on my phone. I'm going to also be able to show you guys the same account on my phone. That's the same account on my phone. I'm going to put a screenshot so that you guys can see. All right, good. So we'll come back again in a couple of seconds when I've already put all the currency pairs.
A little longer than a few minutes later.
We have everything set now, and as you can see on my screen, we have all the currency pairs here and we have the duplicate here. Just as I said, I want one of the currency pair to be on the 4-hour time frame, and I want the other one on the 5-minute time frame, because we need to take our reference on the higher time frame and use the lower time frame to then place our trade. All right, so that's the first thing I want to be able to take out of the way. And most of these other currency pair, NZD, Euro NZD, and Euro CHF, I don't mostly trade them, so that's why you see I didn't duplicate them. And I even added some other currency pairs again. You see AUD JPY, AUD USD, CAD JPY, and even indices. I even have I have an index right here. So most of you guys who also ask, does this strategy work on indices? Does it work on US 10? Does it work on NAS 100, on US 100, or on US 30 or US HT? The same strategy still works. That's why I have US 100 right here. All right, good. So we're going to be starting with this, and as you guys already know, the first thing when I open a pair is to go on the 4-hour time frame. So let me just, I can already remove this terminal since you guys have already seen the balance, but when we open more trades, we'll be able to come on this terminal so that we can actually see what's going on. All right, so I'm just going to close it for now. And on this screen, let's minimize this again. We want everything, we want to be able to have all the screen to ourselves. Good. Perfect. So on this screen, as you guys already know, this is our Omega gold. This is gold, you guys can see. And just looking at this, you don't need any tool to be able to confirm if the market is going up or down. You can already see the fast moving average has already crossed over the slow moving average from above, or the blue moving average has already crossed over the red moving average from above, or the 10 exponential moving average, which is its fast moving average, has already crossed over the slow exponential moving average, which is also the 23 exponential moving average from above, and the market is slanting downward. Meaning on the 4-hour time frame, gold is on a clear downtrend. Full stop. That's the only thing we know. We already know on a 4-hour time frame, gold is on a clear downtrend. That's what we know. And the whole, it means for the since from the 26th of March to yesterday, gold was entirely on an uptrend. Once we've already confirmed the trend on the 4-hour time frame, we want to go on the lower time frame and only execute our trade in that direction. Full stop. As easy as that. You need to confirm your trend on the high time frame. Then when you go to the lower time frame, you only look for opportunities in that direction. Meaning on the lower time frame, I'm only going to be looking for sell opportunities until the trend changes on the 4-hour time frame. As easy as that. Until the trend changes on the 4-hour time frame, I'm only going to be looking for sell opportunities on the lower time frame. And the reason why I'm using the 5-minute time frame is because I want us to scalp. I want us to get in and out of the trade within less than an hour. All right. If I wanted to day trade, I would have still used the 4-hour time frame as my time frame of reference. Then I use the 1-hour time frame to execute my trade. But I want to use the 5-minute time frame because I don't want us to stay on the trade for too long. When we finish this whole series, we'll start another series where we'll be able to do it on the 1-hour time frame. We'll be able to use the 4-hour time frame to confirm our setups and then use the 1-hour time frame to actually trade. So for the purpose of this video, we're going to do this series strictly on the 5-minute time frame. So now we open now the next currency pair, which is still gold, on the 5-minute time frame. And on the 5-minute time frame, can you see the opposite is happening? The opposite of the trend we saw on the 4-hour time frame is happening. On the 4-hour time frame, the trend was what? The trend was an uptrend. The trend was a downtrend, sorry. And then on the 5-minute time frame, you can see the trend is clearly an uptrend. This moving average, the fast moving average already crossed over the slow moving average from below right here, meaning the market turned from a lower time, from a downtrend to an uptrend somewhere here on the lower time frame. So what we're going to do here is we're just going to stay on this. We're going to leave this currency pair the way it is, because the trend on the lower time frame is not confirming with the trend on the higher time frame. They all have to be in sync. They all have to sync with each other. If the trend on the high time frame is a downtrend, on the lower time frame it needs to be a downtrend before we can look for a setup. If the trend on the higher time frame is an uptrend, lower time frame has to be the same. So we need to wait until we see a cross. We'll see when this fast moving average will cross over this slow moving average and then close. So long as we see that cross and then wait for a pullback to the slow moving average, or between the slow and the fast moving average, boom, we're going to start looking for our setups. That's why I say you must watch the video which I made explaining this strategy in detail, so that you can be able to understand what we are doing. Good. So for now, we're just going to leave this currency pair the same way it is and only come back and check maybe after a couple of minutes or maybe an hour to see if the trend has actually changed from an uptrend in the lower time frame to a downtrend, which is now going to be confirming what? So long as we see a downtrend on the lower time frame, trust me, on the 4-hour time frame, we're going to get our confirmation now that, okay, both the lower time frame and the upper time frame are in one direction. And at that particular point in time, we are trading with a big fish. We are swimming with it. Don't try to swim uphill, all right? Or don't try to swim upstream. It's very difficult if you are trying to swim upstream. If you are trying to trade against the trend on the higher time frame, is the same as trying to swim upstream. Don't do that, guys. That is very, very dangerous. We need to be able to confirm where the bigger guys are trading, where the hedge funds are trading, where the big fish is trading. We should only be able to trade in that particular direction. So with that being said, just a minute, guys. Okay, so with that being said, we're going to be going to another currency pair. We don't currently have a setup on this one. That's why you have many currency pairs. Just scalp through to see which one will give you a setup. Then we can go to Great Britain Pound USD. On Great Britain Pound USD, VV, quick, we can already confirm there was a cross here and the market is in an uptrend. So we are going to the lower time frame just to confirm if the 5-minute time frame is also on a lower time, is also on an uptrend. And voila! Voila. I can already see our first setup. We already confirmed now on the lower time frame what's happening. The lower time frame, the 5-minute time frame is also on an uptrend. And when it's on an uptrend, what do? You wait for the market to expand in your direction and push back to the fast moving average or between the fast and the slow moving average and then close. So our signal was right here. This was a signal right here. All right, the market pushed back to what? To the fast moving average or between the fast and the slow moving average and then close with a bullish candle. So long as we have it close with a bullish candle, that is a setup. We are going into that trade. So we're just going to delete this and we are getting into this trade right here. And since we have a $1,000 account, this is how you quickly calculate the lot size so that you can only risk a particular percentage on that particular trade, right? So reasonably, if I'm entering here, remember according to the strategy, your stop loss is just supposed to go below this particular candle right here. So our stop loss is going to be like 4 pips. Remember, this is scalping, all right? Our stop loss, and that's why I'm using an account that the spreads are very, very low. Good. So our stop loss is just going to go below this candlestick right here, which is just going to be like 4 pips. Good. So we already know our stop loss is going to be 4 pips, and we are going for a risk to reward of 1:2. Let's target 1:2. Let's use a risk to reward of 1:2 for this strategy. Meaning we can't take a trade if we're going to be able to gain 2 times what we are risking. If we are risking $1, we need to be able to get $2 if the trade goes our way. If we are risking $10, we need to be able to get $20 if the trade goes our way. In that way, even if we are 30%, even if our success rate is just 30%, we're still going to be profitable. Even if it's 40%, we're still going to be profitable. Meaning, even seven of your trades are all losers, you might still end up as a winner. Or even if 6 of your trades are all losers and just 4 are winners, you will still end up as a winner. That's the power of understanding risk to reward. And in the best case scenario, even if your strategy just gives you a 50-50 win rate, it means you still be a millionaire at the end of the day. Even if someone sees your computer and the person sees many losers, you will still be making money at the end of the day. So now you can see the market is already pushing in our favor. We're supposed to have been in this trade by now. So let's quickly go and calculate the risk. So to calculate the risk or the lot size you can use on this trade so that you can only risk a particular percentage on that particular trade, the website I want you guys to use is Lionheart Funding Program Risk Calculator, all right? Or Lionheart Funding Program Forex Calculator. The good news is Lionheart Funding Program has been able to bring the Forex Calculator right into Lionheart Funding Program. So if you want to be able to calculate the lot size you want to use on any trade, the pip value, the margin requirements, there are a lot of things you can use this Forex Calculator to calculate. Even still on Lionheart Funding Program, there's a website, there's a page where you can read news events right on Lionheart Funding Program. You can also see client sentiment. What are people doing? What are the majority of the people doing? Are they buying or they are selling on a particular currency pair? That's why we have even the sentimental analysis on Lionheart Funding Program. So let's quickly go to Lionheart Funding Program and calculate our lot size, right? So here, this is where we're going to be calculating our lot size. If we come here on Lionheart Funding Program, you can see under tools. You can just check the link on the video description. It will take you directly to these tools. Under tools, you can see trading calculators, economic calendar, forex sentimental analysis. So we're going to be using trading calculators. So we click on trading calculators. And remember, you need to be able to know your account size. What was our account size again? Let's just quickly go here and then we'll see. So our account size is what? Our account size is $1,000. And what's the currency pair? We're going to be trading gold. And remember, I think we're using position size in price, position size in pips, profit calculator, pip value. So we're going to be calculating position size to know the lot size we can use on that particular trade if we are risking 4 pips and going for a risk to reward or 1:2. So currency pair you select is gold. So gold should be SAU USD. So you can see, you just press SAU. That's it, that's gold right there. Then it's USD, account balance is $1,000. Risk percentage, we can risk 1%. Let's risk 1% per trade, guys. But in most cases, I used to go with 2%. And then stop loss, let's go with 4 pips. All right, 4 pips, that's it. So we click on calculate. And voila, you can see amount at the risk is $10. Means we're only risking $10 per trade. Remember, I'm using a small account to show you guys how it can be done on a small account. Then if you are using it on a $50,000 account, $10,000 account, $100,000 account, it's just the same thing. If I make 1% on my $1,000 account, it's gonna be like 1% is gonna be like $1. All right, or 1% of it's gonna be like $10. But if I make 1% on $100,000, that 1% is going to be $1,000. So you can be able to know the difference. When you already know how to trade, the problem is just a game. It just becomes a game of zeros. Good. So after clicking on calculate, you can see amount at risk is $10, and then sizing we're going to use a 0.25 lot size. All right. So we just go back to MT5. You can see the market already pushed. We would have already been getting out of this trade. Can you see this? The market already pushed by even 1 arrow on our direction. So we're still going to get into this particular trade. Anyway, let's get in. So we just go here. We put 0.25 and then we click on buy. All right. When you click on buy, just make sure you activate one-click trading. Click on buy. And when we click on buy, you can see we're in a trade. You just right-click on the trade. Make sure your mouse is on the trade. You right click on it, and if you are finding the difficulties, you just open your what? You just open, let's just go here, press on Control T, then you open your trading terminals. You right click on the trade, go to where it says modify, and then on modify, you see where it says stop loss. Stop loss, just click here, or click in terms of points. You just put the 40 points is the same as 4 pips. So if you are putting 4 pips, it has to be 40 points. So you put there 4 pips and then this one. So since the market was already pushing against us, let's use 5 pips, right? Let's use 5 pips and then we're going to be going for 10 pips. Remember, we are going for a risk to reward of 1:2. So 5 pips is the same as what? Is the same as 50 points. and 10 pips is the same as what? 100 points. So long as you've already done that, you click on modify. Boom. Can you see this? So on our computer now, we have our stop loss here and we have our take profit right here. So this one, the market is already pushing against us. If it has to hit our stop loss here, we'll be out of the trade with minus 1%. And if it continues in our direction and go up, then we'll be able to make 2% on that particular trade. As easy as that. I don't care whether it has to go against me or not. There's a methodology I'm following. There's a style of trading I'm following. And I'm just going to stay on the trade. I'm just following my trading rules. I'm just following the rules on my trading plan. So long as I've already done that, I have my stop loss, I have my take profit. There's nothing to worry. There's nothing to be crying. I go to the next trade. All right. So we can then leave. We can even leave this window open. So we quickly go to USD JPY. USD JPY on the 4-hour time frame, I can already confirm the market is in an uptrend. So I want to be able to look on the lower time frame, 5-minute time frame, to also confirm if the market is in an uptrend. Perfect. So if you can see, there was a cross actually somewhere here, and now we are in an uptrend. So this candle, if this candle closes here as a bullish candle, then we're going to be getting into this trade. So this one, we're just going to be waiting. We're going to come back and check after 5 minutes. After 5 minutes, this candle closes as a bullish candle, then we're going to be entering a buy, because you can see the market has already pushed back to our fast moving average, or between our fast and slow moving average, and then we are waiting for it to close as a bullish candle. So that one, we'll leave that one open. What I used to do in this case is I'll just come here and I drag it out a little bit like this. All right, I put it here where you see the square, and the one I actually have the trade up and running, I can drag it full until we have it on this particular place, so I can have it completely out like this. You can see it means I have a trade on this one and I'm waiting for a trade to actually actualize on this. So can you see the methodology behind how I'm analyzing all of this? Good. So at this particular point in time, I already have a trade here. I'm waiting for a trade to actualize here. So we go to the other currency pair on our list, which is Euro USD. Euro USD on the 4-hour time frame is an uptrend. So just looking, you can see there's a cross here sloping outward. That's an uptrend. So let's go to the lower time frame on the 5-minute time frame to confirm if Euro USD is also an uptrend. Remember the indicator, if it's not there, you just bring it in, drop it there, and voila, that is an uptrend right there. An uptrend where the market was able to push back right here and produce a bullish candle. So we're supposed to get in right here. So now we're still going to get in as we speak. So we just come here again. Since it's Euro USD and we just traded with Great Britain Pound USD, the p-value is almost going to be the same. So we just put our lot size. Remember, here, if we enter somewhere here, I want us to put our stop loss below here. I want us to risk 4 pips and go for 8 pips. That's it. Let's risk 4 pips and go for 8 pips. So let's go here to our position size calculator again. And in this scenario, we're trading Euro USD. So Euro USD should be somewhere. Let's just see Euro USD. That's Euro USD somewhere there. Account balance is the same. We're risking stop loss is 4 pips and we calculate. So you see, it's almost the same thing. We're still going to be using the lot size of 0.25. So we come here again. We have 0.25, and then we click on buy. Voila. When we click on buy, you can see the other trade is there. This one too is there. We just go to modify, quick, and then we add our stop loss, which is 4 pips. So 4 pips is the same as 4 points, and 8 pips is the same as 80 points. We click on modify. Voila, that's it. Then we'll go to the next trade. We're already done. So since we have a trade here, we can drag this one out to stand right here. So we'll go to the next trade on our list, which is Great Britain Pound AUD. Drop it on the 4-hour time frame. Bring in our indicator. If it's not there, go to template, drop this one. Our indicator is right there. And then we can already confirm the market is in a downtrend, clear downtrend. You can see these 2 indicators all sloping downward, all moving averages. So on the 5-minute time frame, we're just looking for the same thing. Guys, that's why I used to say you analyze like a pro and execute like a robot. Analyze like a pro and execute like a robot. Meaning when it comes to your analysis, where you're doing your analysis, take your time and do your analysis. But when you see the setups, guys, follow your trading plan. Don't start circumventing. analyze like a pro and execute like a robot. So on the lower time frame, which is going to be the 5-minute time frame, I'm going to bring in our indicator, and remember we just want to confirm if it's also on a downtrend. So we'll go here, we drop here, and voila, you can see this is on the opposite. So on the lower time frame, Great Britain pound AUD is instead sloping upward, while on the higher time frame it was instead sloping downward. So there's no setup here, so we go to what? We go to another currency pair. Meanwhile, on our market, on our trading terminal, you can see all the two positions we took, both Great Britain pound USD and Euro USD. We are already up with $6. $6 on $6 on a $1,000 account. That's already more than our 3% of our account. All right, this is almost already more than 3% of our account. Where you can see that's $7 already, the same trade. All right, meanwhile we are just still looking for other setups, and we're not worrying because there's already take profit in place. There's already a stop loss in place. Good. So we'll quickly go to Great Britain pound card. We drop it on the 4-hour time frame, bring in our indicator, and we can already confirm this one is in an uptrend, clear uptrend. So we'll go to the lower time frame just to see if we can confirm if Great Britain pound card is also on a clear uptrend. So we'll go here again, we bring in our indicator, and voila, this is the best confirmation I was looking for. High time frame is in an uptrend, lower time frame is in an uptrend. But now we can't take any trade until we see something like this. So we need to wait to see a pullback from wheresoever the market is right down to the fast or between the fast and the slow moving average. Then we wait for the market to close, and the first bullish candle we see at that point will give us a bullish signal, and then we buy. So we wait for the market to breathe out and breathe in. If it's an uptrend, then we wait for the market to breathe out, and then when it breathe in and give us a bullish candle, that's where we jump in, because we're trying to roll with the trend. We're trying to trade in the direction of the trend. So waiting for this to happen, for the market to push back right here and then give us something like this, and then we'll all enter somewhere here. So this one again, we'll just keep waiting. So this, we need to push it, pull it out. So we come here, we pull it out to this particular square. All right, now we are waiting for a setup here. We are waiting for a setup right. This one, we already have a trade on this one. So this one is already out. This one, we're waiting for a setup here, and we are waiting for a setup here. So push it inside a bit. So let's go to Great Britain pound JPY. We bring in Great Britain pound JPY 4-hour. I can already see how the market is going crazy. So that should be an uptrend. There's no doubt. Perfect. That's an uptrend on the higher time frame. Let's go to the 5-minute time frame to confirm what is happening. On the 5-minute time frame, you can see if we bring in our indicator and then drop it on the 5-minute time frame, voila, 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 voila. You can see the market already pushed back to our lower time, to our slow moving average, or between our slow and the fast moving average. We're supposed to have gotten in right here, so we can still get into this trade as we speak. So we're going to get in here. Our stop loss should go on around 8 pips. So this one, let's risk 8 pips and go for 16 pips. All right, remember, I'm just putting my stop loss below the recent swing. So if I'm entering there, I want my stop loss to go below this swing, which should be 8 pips, and then we go for 16 pips. So let's calculate. Now we already know where our stop loss is going to be. Let's quickly go on our tool, and then we calculate the lot size. So remember, we're trading Great Britain pound JPY. So Great Britain pound JPY should be somewhere here. So this is Great Britain pound JPY. Where is it? Okay, Great Britain pound JPY is right there. Account size $1,000, risk per trade, and then stop loss is 8 pips. Remember, here you put in terms of pips, you put 8 and then you calculate. Perfect. It means the lot size we can use here is 0.19. Always just look. I just take the 2 decimal places, round it up, and I take the 2 decimal places. So it's 0.19. All right. Or you can just use 0.2 or 0.19 or 0.2. So to be more accurate, let's use what the software is telling us. Let's use 0.19. All right. Then we click on buy. Perfect. When we click on buy, we come here and we locate Great Britain pound JPY right here, and then we go to modify. When we go to modify, remember our stop loss is 8 pips, which is the same as 80 points, and our take profit is 16 pips, which is the same as 160 points. Voila! Can you see this? If I minimize in, you can see that's our stop loss, that's our take profit. That's it. We are done on that particular one. We go to the next setup. Meanwhile, on our trading terminal, we are still up of almost about $5. Good. So let's quickly go to the next trade on our list, which is let's check another one on okay, let's check to see if we can have a trade on Euro JPY. Euro JPY is still another very nice pair, right? So I'm just going to close this terminal so that we can have enough room to see what's going on. And then we close here, go here, drop it on the 4-hour time frame. On the 4-hour time frame, we can be able to confirm Euro JPY is sloping upward. Then let's go to the lower time frame, which is the 5-minute time frame, and what we are looking for, we are waiting to confirm if the 5-minute time frame is also on the on an uptrend. Voila, it's an uptrend. So we were supposed to get into this trade somewhere. You can see the market push right somewhere here and then gave us what? Gave us a buy signal. So this one, if we would have entered here, our stop loss would have been here, we would have lost 4 pips. But here again, since the market is still sloping upward, that's where you can get out of a trade and still jump in. Since the market is sloping upward, we would have gotten in again somewhere here, risk about 8 pips and go for 16 pips. You can and go for 8 pips, 4 pips and go for 8 pips. Voila, you can see we're already on the way. So this one, we can't actually jump in now because you can see how the market is already almost more than halfway in our favor. So we'll only wait to see if the market can extend and then contract back to the slow or fast moving average, and then we look for a setup. So that's what I can see there. And remember, this sounds like something which is cumbersome, but when you keep doing it after some time, it will just be something you just open, boom, you already see, no, there's no setup here, boom, I go to the next one. You can use a minute to be able to place even 2-3 trades, all right? So we're just going to push this one out again because we're waiting for a setup to actually mature somewhere here. So we'll just push it and put it somewhere like this. And then let's go to CAD JPY. CAD JPY is still another pair I like so much. CAD JPY, we bring in our template on the 4-hour time frame, drop it on the 4-hour. We can confirm the market is in an uptrend. Go to the lower time frame, bring in our 2. We can confirm that the market is 5-minute time frame, voila, on an uptrend. And the market pushed back here, then gave us a signal. Would have lost somewhere here, would have lost this one. Remember, you're going to have some losers. By the end of the day, our goal is to be able to, our winners should be bigger than our losers. So this one would have been a loser, and this one too would have still entered here because remember, you can see the market is still in an uptrend. So this close of a bullish candle would have gotten in right here. So let's just use, since it's still CAD JPY, we just recently traded Great Britain Pound JPY. We're going to be using the same loss side, which was 0.19 or 0.2. All right. Then we click on buy, and for this one, we're going to be risking. Let's risk 4 pips and go for 8 pips, all right? So let's risk 4 pips on this one and go for 8 pips. So we just open our terminal again, and then we go for CAD JPY. CAD JPY is right here, and then we go to modify. We put it on what? We put it on 4 pips, and then we go for 8 pips, all right? Good. Perfect. You see, position is modified, and you can see Great Britain Pound USD is presently on a loss. Great Britain Pound JPY is in a loss. Then Euro USD is in a win, and then we just got into CAD JPY. So let's wait to see how the trades are going to play out. Let's see how we can get, if we can get another opportunity before we are done for the day. Let's check indices. Remember, most of you guys have asked, does it work? No. Let's also check on indices to see. We drop it on the 4-hour time frame, the same thing, and we can already confirm somewhere here the cross hasn't happened yet. So on the lower time frame, Nasdaq is still on a buy trend. Nasdaq is still on a buy trend on the lower time frame. On a higher time frame, sorry. Meanwhile, on the lower time frame, which should be the 5-minute time frame, we just want to confirm if it is also on an uptrend. So we bring in our 2 to confirm if it's perfect. Can you guys see? This is a clear uptrend. So what are we waiting here? We're waiting for the market to push right down to this, right down to what? Right down to the fast moving average, or between the fast and the slow moving average, and then produce a bullish candle like this. Remember, at that point in time, the candlestick pattern doesn't matter, all right? So if it's any bullish candle, no matter how it looks, will give us that signal. So waiting for that to happen, and then we can only get in. So we can only get in if that happens somewhere here. Can you see that? So waiting for that to happen, At this particular moment, we'll just push it out a bit so that we know that we are watching for a trade here. Let's check our last trade on AUD USD. We go here, go on template, drop this, then we drop it on the 4-hour time frame. We can confirm it's on an uptrend. Lower time frame, which should be the 5-minute time frame. We bring in our tool. We can be able to go on template, and on template, let's just quickly go here. We can be able to confirm it's also on an uptrend. Remember, what was the trend on the higher time frame? The trend on the higher time frame was an uptrend. On the lower time frame, we also have an uptrend. So what are we going to do? We're waiting. You can already see this was a setup right here. So we're just waiting for this candle to close. If this candle closes as a bearish candle, then we're waiting for the next bullish candle. So the next bullish candle we get, we're going to be getting into the trade. So what happened? We just push it out. We push it out a bit to just leave it standing like this. Good. So now you can see we have this one standing out, and we also have this one. So we go back and we check to see if the trades have actualized on this one. So Euro USD, good. You can see this is already a setup because now this one closes as a bullish candle. So now we can buy this one 0.25. Remember, we are risking 1%. And 0.25, and then our stop loss, remember we said our stop loss, we're going to be risking just 4 pips on this trade. Since we can have our stop loss here, we can go for 6 pips, right? So we can risk 3 pips on that trade and go for 6 pips. So the best thing you can do here is always use a broker that is having very low spread. And if you want to use a broker that is having very low spread that will allow you to be able to trade on any style you want, then check the link below. Guys, you need to be using my recommended brokers. Check the link below and sign up an account with the brokers that I'm recommending below, because those are the brokers that will allow you to trade freely like this, and they'll also happily pay you if you make profit. So this one we're risking 3 pips and we're going for 6 pips. So it's 30 points and 60 points, and voila, you can see that's our stop loss, that's our take profit. So we go now to the next one, which we're waiting for it to actually mature. So if you close this one, now we have a trade on this one, so we can push this one out. And then Great Britain Pound USD, I can already see Great Britain Pound USD was a loss, so we open Great Britain Pound USD and down. Can you see this? So we got in here and you can see the market push against us, and we had a loss somewhere here. That's why the good thing is everything is plotted on the screen, and we can see. So we are still waiting again. We're going to be getting into this trade as soon as we have a close again, which is a bullish candle. We're going to be getting in, because remember, what is the indicator still saying? The indicator is still confirming to us that the market is in an uptrend. We keep doing that until the trend on the lower time frame, has changed to now a downtrend. If the trend changes here to a downtrend, it means we're not going to be looking for buy trades again, because remember, on a higher time frame, the trend is a buy trend. We're only trading in the direction of the trend on the higher time frame. So this one, we're just waiting again, and as soon as we have a close on the bullish side, we're going to be getting in. So that's why we need to push it in again a little bit, just for it to stand here. Good. And then we're still waiting for this one on Great Britain Pound CAD. Let's see what happened. We're waiting for a pushback on Great Britain Pound CAD for us to buy, so that hasn't happened. And then on Euro JPY, we're waiting for what? We're waiting for a pushback and then a bullish candle, so that hasn't happened as well. So what we're going to do now is we're going to come back on episode 2, where on episode 2 we're going to be reviewing all the trades, because we've already taken a total of 1 US Tech as well. So US Tech as well, US Tech, we didn't actually take the trade on US Tech because we're waiting for it to actualize. Good, we're waiting for it to actualize. So we're going to come back on episode 2. And on episode 2, we're going to be reviewing all these trades we've taken to see the ones that were winners, to see the ones that were losers. Then we'll also be able to check the ones that we're actually waiting for them to play out. If they've actually played out the way we wanted it to play out, then we're going to be able to take those trades. Our target is to be able to take a total of 20 trades throughout this whole series, so it can be maybe up to 3 episodes, and make sure you watch all the episodes to be able to understand the psychology of a millionaire forex trader, to be able to understand the psychology of a winning forex trader, because just about 1% of people who actually make money in the forex market have this trading psychology. I'm still having losses, I'm still having some trades that are not going my way, but you can still see how calm I am, because I know there's a system which, even if at the end of the day, out of 20 trades, 8 of those trades, only out of 20 trades, let's just say we have about 12 of them, which are all losers, and just 8 of them that are winners, I'm still going to be making money. Or even if we have just 7 of them that are winners and about 13 of them that are losers, I'm still going to be making money. But with this strategy, most of the time, you can have a 50% win rate, meaning 50% of your trades are going to be winners and 50% losers in most cases. And let's do the math. If 50% of my trades are losers, it means 10 of those trades are going to be losers. So 10 trades times 1%, I'm risking 1% per trade, means I'm going to lose 10% of my account. And if 10% of those trades are now winners, it means I'm getting 2%. Remember, I'm going for a risk to reward of 1:2. For each winner I have 2%. So 2 times 10, I have now 20%. 20%, and how many percent did I lose? I lose 10% and I made 20%. So at the end of the day, what's my net? The net is 10% plus 10%. If you are using a Profirm account, you've already passed phase 1 ever since. If you are using it on phase 2, you've already passed phase 2. If you are funded, you're already starting on 10% of your account. And with this, you are not violating any rules like the consistency. You are trading consistently. That is what proprietary company want. That is what big companies want. If you can show your track record to someone and your style of trading is like this, trust me, that person will give you millions of dollars for you to trade. So let's come back after a couple of hours on episode 2 and we'll be able to follow up from there. If you want to follow a step-by-step approach, or if you want to learn from me, go through a course or a curriculum which I've already put in place to teach you guys more strategies like this. Make sure you check the link below to enroll in Godlove University. And if you want a tool, there's a tool I've also developed which is called Paytrex Pro. With Paytrex Pro, even though Paytrex Pro can 100% trade for you, you can still use Paytrex Pro as a signal generator. Meaning anytime you place it on your computer, you're going to automatically just see the market direction without even using any other indicator. So that's the reason why Paytrex Pro is the most viral Forex robot as we speak. And if you want to use my recommended broker, make sure you check the link on the video description. And talking about the prop firm, check the link below to also sign up with my recommended prop firm where you can trade up to $600,000. Thank you guys for watching, and I'll see you guys on these other videos or on episode 2.